Hello guys, Steve Dax here. Welcome to this video. So today we're going to talk about the monthly recaps for pretty much all the tickers that happened in the last 2 weeks. There were a bunch of similar plays that we traded compared to the plays we had in June, April, and May. So there's a lot of similarities, and I can definitely find patterns to trade for those tickers that especially just announced their IPO. Before I start this video, make sure to click the like button and subscribe. Let's get into it. So the first one we have is SPGC. This one was an IPO, and the chart itself looked exactly like LUNR and GDC. We experienced in June and May. You take a look at it, LUNR went from 136 and dropped 80% after its run up. And we're looking at SPGC, dropped another 80% after its run up. And pretty much all of them performed the same pattern after the drop. The way to catch these mass reward is you can use volume comparisons. So if yesterday's volume traded it much higher compared to the next day by using pre-market estimates, you can definitely take advantage of that. But the only disadvantage that you will have is your risk management. So let's take a look at SPGC. We can use overextend gap down on this one. So gap down, closed around 26, and it opened around 20, went to 21, and you only traded the 100K volume at the very beginning. So the first few candles only traded about 100K shares maximum. Max size that you can size in to these type of candles maybe will be 10K or less, must be less than 10K. And your risk will be around either the $30 area or yesterday's close, which will be 26. So sizing in around 10K, your risk will be 50K. Then if you want to risk 31, then your risk will be 100K. And especially by sizing in into those light volumes, those tickers tend to be very dangerous if they reverse. So it's really difficult to get decent amount of shares into the morning push. In terms of how much reward it will have, it's definitely significant. But in terms of how much you can size in, you cannot size in much shares. So I sized in about maybe 3K in total. Ride it all the way till 4, but other than that, I couldn't size in more. And if you're really looking to size in more onto these type of IPO play, you are looking for the bounces that comes a few days later. So let's take a look at LUNR. You can see after its massive run up, you will have this push either the day after or a week later. March 9th, let's take a look at that chart. You can see it went all the way up into the $19 area, consolidated. And in the next day, March 10th, it tested the $19 area and failed. So you formed the double day intraday top. So shorting around 19, it's definitely doable. And the extension itself is not that much, but shorting into these type of plays, they do have sufficient enough volume. So you can definitely size in 10K, 20K, no problem. Then we go ahead, look at GDC. So it pushed right about here on May 3rd. And pushed again around May 16th. And the May 3rd area formed a resistance around 10, and this one touched around 10 area and faded all the way down. So these traded 47 million volume. So in terms of how much you can size in, the volume is definitely sufficient. The way to become profitable on this type of IPO play, wait until the volume exhausts, then looking at the pre-market volume, judge how many shares you can size in. Typically not that many, no more than 10K. Then you can keep the chart in your tab or keep it in your scanner and wait until about a week or two. You can either long it to get a decent bounce, or if you're not very good at long, then you can short it after the stock gets massive amount of volume. Then you can size in it with pretty big size if they do give you decent enough extensions. So that's for the 3 tickers that we had throughout this year. And let's take a look at today's or this week's play. So first one we have CRKN. This one was a gap up short. It didn't really gap over 70%. One thing I want to emphasize on these type of tickers with AHI and CRKN, those tickers did not push 70%, so it does not fit the gap up short criteria. These type of play will train people to short into a very low percentage play, then they will get squeezed once a ticker gains a decent volume, and you will straight go through the pre-market resistance, and it's really difficult for them to get out. As a consistent profitable short sellers, if you really want to short it, don't size in, as a regular size, maybe sizing 10%, 5%. If you really borrow the tickers, you can get your borrow feedbacks. But other than that, the market will train you to short those tickers that's not even over 50%. Then once you got used to it, they will reverse it back and really punish you by shorting it too early. So that will be all of the recap for this month. So if you have any questions, please leave a comment below, and I will see you guys in the next one.